All right, Chantal, you could start the stream. Okay, everyone, welcome to U.S. Retail News. My name is Lee Goldstein, Trading Director at 10 Minute Trades. Please remember all the trades we discuss for educational purposes. It's possible to lose money trading futures. Please trade carefully. And we're going to be looking at a trap trade on U.S. retail. Gold has been gold has been choppy. I mean, it's just been choppy when it comes to news. All right, I'm just listening. Like I said, folks, if I get quiet, it's only because I'm sometimes um, listening to news in my headset. It's not that like I'm, you know, checking out. I'm here. So I'm listening to the news in my headset on Financial Juice. They have a squawk box, and sometimes that'll help us with the trading. So it's good to know. I mean, they give a good recap of the ECB, how they weren't going to, most probably not going to cut any rates. They get the news very fast, faster than the websites. So it's useful. It's useful. I'm not checking out, I'm listening. So gold looks like it still looks to me like it wants to create a new high. Okay. Now, I haven't been trading the gold open only because there's other things we usually have going on at the same time. And other people do like to trade the gold open, especially when there's news. Especially when there's news. Let me show you the MM. So I would assume that early bird gold traders are probably long. Like anyone that was looking at trading gold, say at 7 o'clock, right? Depending when you started looking at the gold market. I mean, it's clear it started moving up before 7. For me personally, I've said a little while ago it was going to test the high, and it's going to. The question is, sometimes you can get caught if your stop's too small on some of these pullbacks, right? So you have to have a pretty darn good size stop. If you're trading gold as a discretionary trader, one of the tools that we've been looking at is ATR, and we're multiplying it times 3. And that's one of our members, Mark, came up with this system that's working really well. So the gold ATR has a ballpark of 8. Mark, what's your ATR on gold? 8. I wonder if 8 is big enough. So 24 tick stop, 8 times 3. Yeah, okay. So yeah, we're pretty tied in, similar. So all that means is ATR gives you an idea of volatility, and he just discovered multiplying it by 3 gives him a good size stop to work with. 24 is not that big a stop on gold, which kind of lends credence to our analysis that gold was in a tighter range than normal for lately overnight. So it's a little bit smaller stop. But so carry this forward, right? If you carry this forward, you might use that stop if you were going to trade the gold open. Let me set up the retail trade, okay? So our retail trade, it's a trap trade. One position, one position. The stop is 18. And then the tiers, now I always put the stop in last on a trap trade. Tiers always have a range. It's just tradition. It's the way we've always done it. So, in other words, tiers are your brackets, okay? They're essentially the brackets. So, my first tier, I'm going to use 16. And my second, I'm going to use 28. I'm not going to use 30. I think there's a possibility that there could be a strong move today, but we've just seen retail, retail, retail over the past 6 months doesn't always fill both tiers. The time of the event is 8:30, or the trade time. Some of your software says trade time. And the activation time, I use 5 seconds, not 20 seconds before the news comes out. The way you read this is 8:29:40 is 20 seconds before the news is released. My testing showed, especially in these current markets, there could be so much pre-trade volatility. I don't want to get filled before the news comes out. So I don't want my orders on the chart more than 5 seconds before the news. And then I double check my stop. Make sure your stop loss position says last fill price. Make sure your bracket center says price at the time. I'm recording this. So the concept with a trap trade, I'll show you. So that's my setup. Tier 16 and 28, 8:30 event, 5 seconds preparation, activation. You can probably use a 20 stop on this. 2 reports today. Give you a tiny bit more breathing room. So that's my setup. So what's the idea of a trap trade? The idea of a trap trade, it's not that complicated. You're putting double brackets on the chart, and you're looking for an up and a down move. You're looking to get filled in one direction, opposite of the move. So if the price goes up, you're looking to get filled short. If the price goes down, you're looking to get filled long. This side we're looking at. So last month, it fills the bottom tier, the first tier. So if it looks like it's not going to fill the second tier, you cancel. You hit not close, you hit the cancel button, cancel the outer tier. Right now, it looks like it might go back down and fill it. So I'm not canceling it yet. I did already. I'm sorry. I did cancel it. So let's see when I canceled it. Let's go back. Okay, you probably could have canceled it on that move up, but it then came back down, which is not that unusual. And maybe I canceled it. Maybe I shouldn't have quite canceled it yet. Could have waited. But so we were filled on a down move long. So you're waiting for a reversal. Okay. And you make your profit on the move in the opposite direction on retail. It was really chopping around last month, and I couldn't make a decision what to do. So it took 8 ticks, $80. Ultimately, you want to try and be patient. You want to try and be patient with a trap trade. Give it a chance to hit your targets, which sometimes takes time. If you're chopping around, it might take time to move up and down. So I'm going to try and be patient. It's hard on these trades. And then, there are people trading the gold open now also. They like trading the gold open on days when there's news. So, Mark, what's your reason for trading when there's news as opposed to if there's not news? Is it as simple because there's better movement in gold on mornings where there's news? Is it that simple? Yeah, okay. Volatility. So if you use tick strike signals, right, for the gold open, first let me set up, make sure my trap trade's ready. And it is. So the gold open, we do it the same way we do our other opens. If you get the idea is to take the best move at 820, but that first move sometimes is a false move. So you want to try and take the best move if you're going to trade the open. A lot of traders on days where there's news, they're already in the gold market because it starts moving pretty early in the morning. So remember what we said, the ATR. I have a gold setup for the gold open. I have a template. Today, the ATR was 8-ish, right? And my first target is 8, I believe. I wanted 8. My second target's a little bit bigger. The stop, 3 times 8, ATR was approximately 8 this morning. So my stop around 24. If my first target gets hit, I'm moving my stop to break even, -3. And then I'm not using the range to enter the trade, but I'm looking at the range, graphic shown on chart. I have a default range for all my open trades. One tick above the range, one tick below the range, one click bar look back set to 1. That would be theoretically if I wanted to let the market come to me by using the range, okay? So the concept, though, is trading the gold open not really very differently from the way that we trade the oil open. You're looking for that first good signal at the open, and today is a Friday. It's a strange day because there's no markets open tomorrow. Today will be probably quieter than other days. So, but I'm not trading the gold open live only because A, I just haven't worked on it enough. And B, we have so many other things going on at almost the same time. I just think it's a little bit much to focus on. I feel like I'll lose focus. But there's no harm in showing it. So let's take a look. And today is sort of a Friday. Why? Because, again, it's Easter, Good Friday tomorrow, markets are closed. So it's definitely a weirder day today. It's not a normal Thursday. So the gold open is at 820. For what it's worth, the bond open is at 820 also. And bonds, I believe they actually still have a pit. Bonds are one of the rare pits that are still available, still there. I'm pretty sure there still is a bond trading pit. So we can check our time sync again. And so basically I'm using the indicator just the way we use it on the CL open, but we use it a little bit differently on the NQ open. All right, so gold opens in 2 minutes and 15 seconds. And it could be a little quieter today, but it does have movement. We've been watching, I watch the gold open, even sometimes when I'm not in the room, and there is movement. It's an open that I think there's 3 opens that we've been looking at: gold, oil, NQ. I like NQ the best. Oil and gold, I find, are tricky to trade. But maybe in some ways they're easier because the idea is to not analyze price action before the opens, but just to try to get the best first signal. So the gold market's not open yet. Opens in another minute and 10 seconds. Sometimes the first signal is orders that are pent up and waiting for the open. And so we try to not jump in on the first signal. So you could, like, let's say you just got a short signal. If you use the one-click range short button, it'll put your order down below at the bottom of the range. So it will make the price action come to you. That's one way you could use the software to try to keep your open entry a little safer. So you don't want to get thrown by early signals. It doesn't mean that we're automatically going to get short signals now. It's not a guarantee that we're going to get short signals now. So there will be a first signal, probably. Okay. Not much happening yet. Just waiting. So there hasn't been much of a signal yet. Okay. Now, it doesn't necessarily mean you won't take a signal. Gold barely tested the high. It was not a true magnet trade. It didn't touch the high, and it's a couple of ticks away. So, me personally, today's a weird day. So, that's not a bad signal. I don't think it's strong. It's a -9. Now, some people might have taken that signal instead of the first one. You're not getting very good follow through. You're not getting good follow through. I have an first target, eight first target, one tick away. Okay. My stop, remember, automatically moves to break even -4, right? You're getting follow through signals now. So you can just watch. I mean, you could now just put your stop break even. You don't have to give any of it back, right? Why do you have to? You don't. You could make your target a little bigger and trail a little bit if you want. You can just leave everything in place. Maybe don't trail until you get a candle to close, right? But that was a pretty easy open. That's a profitable open. We can't lose money now. Might as well try to keep getting a runner, trail a little bit now. Bottom of the first candle. Why not trail? Increase your target size. Okay. Increase your target size. PP might be a good place to get out. Might be a good place to get out. Trail a little bit, not too much because the candle's not finished yet. Or, you know what? We have a trade coming up. You could say party's over, right? I'm going to trail close to the current price. See if it goes, see if it gets close to the PP, but I have to be out of this trade before our 8:30 trade because we're trading the same index, right? Trading the same index. So I'll trail to the bottom of the next candle and I'll let this take me out now because I have another trade I have to get ready for. You can do both. Yep, I agree. We can do both. We can trade the gold open, and we could use micro gold because you're risking 24 ticks, two contracts, $480 per trade. You need so perfect setup, great trailing. I mean, and now we're done. Gold open is done. Okay. Gold open is done. And I'm done using because I'm getting ready for a trap trade now. I'm getting ready for a trap trade. Okay. So that was the gold open. No, really not trading it any differently than the oil open. And that made it look easy. That made it look easy. Today was easy. Now, if you want to take our offer, we have an offer. We were in a webinar where we offered Tick Strike. You can get a lifetime Tick Strike subscription. Here's the link if you want to do it. I love Tick Strike. We use it for the opens. That's the link. You can get a good deal, or you can get the deal that they offer for a lifetime. But let's see, are people watching us on YouTube? So YouTube, that was like a little extra bonus trading the open. Now we're getting ready to trade US retail with a trap trade setup. Give us a like if you're watching us on YouTube and sign up for the channel so you know the next time we're going to stream. And then you can hit the notification bell and you'll get notified the next time we're going to stream. I think retail sales are going to be really good. I think retail sales will be really good. Job numbers, no idea. Not sure. I've got the news off to the side. Okay. Going to record retail. So 5 seconds before 8:30, our tiers or orders or brackets, whatever you want to call them, are going to show up on the chart. If price goes up, we're going to be putting the market short. If price goes down, we'll probably be putting the market long. So that's how you can trade the gold open before 8:30 news. We're not analyzing. We don't really care because look, gold was very bullish since 7 o'clock this morning. It was quite bullish. Now, it was probably helped by that almost making a new high 10 minutes before the open. That, maybe a discretionary trader would say, yeah, that sets up a really good reversal off of the high. So it gives you, at least it makes you feel that that short signal might not be a bad signal. You can always justify why a signal is better than another signal. Now, normally the way that I do it is if there's a big delay at the open with no signals, then I will take the first signal if it's strong. If it's a 2 or if it's a 6 or I might not take it. If it's an 8 or above, then I did take it. Yeah, it's true. Market orders can come in anytime. Absolutely true. You never know. We never know what's going to happen. So after, let's pay attention. Retail, our brackets are going to show up. So the news comes out. It's it's a little bit positive. The news is positive so far. It's mixed. The news is somewhat mixed. Okay. Jobless claims are a little bit up. Now, if there's no fill, I think we'll get a fill. I think we will get a fill. It may only fill one order, right? It may only fill one tier. So normally I'll give it at least a minute. You know, if we don't get a fill in a minute or a minute and a half, it might be because, okay, there's our fill. So now the decision is, do I cancel the outer tier or wait and see if this buy order gets filled? Right now, I'm not canceling because gold is moving down. There's no reason to cancel this order yet. Now, if gold was to shoot up, I might consider canceling, but it's not. So we're just waiting to see if it will fill that tier. I don't have to cancel the tier. If it hits my first order, my target, it'll take me out anyway. So here's my first target, right? If it hits that, it would take me out. But I don't have to cancel yet because maybe it'll hit that tier. If it gets near my first target, then I'll cancel. So it's just chopping around, not really doing much. And this is the kind of behavior we see a lot in these, we've been seeing in these retail trades. So we want to see a move up, and we're not getting it. But I'm not going to cancel that tier. Okay, that's why I'm not canceling. Now, it would be a shame if gold just keeps going in one direction. It could, and then we'll get stopped out. I'm moving my targets closer to see if we can get a move up. Both tiers filled. So gold's been pretty bearish. I'm not real happy, you know. I might combine my orders. So now, at this point, I want it to move up and hit my target. That's what I'd like to see. Move up, change direction. That's what we'd like to see. But it's really struggling, right? I can shrink my stop. I don't have to take a full stop, right? Trying to see if I can get out with a little profit because gold is heavy. Gold looks heavy to me. This is a tough trade. Very tough trade. So see if we can get 120 bucks. One more tick. Can't get those ticks. Struggling to get those ticks, folks. Gold is heavy. Gold is heavy. This is a tough one. This is a tough one. We're just not getting that change in direction at all. Maybe, maybe now. Nope. It doesn't want to give it to us. Doesn't want to give it to us. I think gold is just too heavy. I don't want it to stop me out. Sometimes it's not always a question of patience. The index is just very heavy to the downside. My stop is big enough. I think we're going to get stopped out. Maybe I should have taken the profit when it hit 100 bucks, but I've been so impatient on these trades. I think we're going to get stopped. The pushes to the downside. We'll see. Too bad. So we got stopped. Shame. So that's the first trap trade that didn't work in about a month and a half. No, 6 months. Let's look. Let's look. 6 months. So I can't. I could take the blame, I suppose. I could take the blame. Price was heavy. I probably should have gotten out a little bit earlier. I probably should have gotten out a little bit earlier. So that's pretty frustrating. Pretty frustrating. Pretty frustrating, to say the least. All right. I got to get ready. We got to get ready for the next setup. Bear with me. So the oil, the gold open was fantastic. That was the trade. I mean, that was a great trade. Too bad we haven't been trading them yet. I just haven't had enough experience trading them. So of course I'm disappointed. I really wanted the trap trade to work this morning. YouTube, thank you so much for watching. Um, We have lots of winners mixed in with losers. You're not going to win every trade. If you want to come into our trade room, we'd love if you do it. www.jointhetraderoom.com. You can come and join our trade room. It's $97 a month, and we'd love to see you. So come join the trade room. Hit the like button on your way out. We have to close the stream. Thank you very much for joining us, and we'll be streaming again next week. So thanks on YouTube.